We're all learning a lot today. Welcome to Power Lunch. Alongside Dom Chu, I'm Kelly Evans, and that was quite a tour de force.
I think so, and I'm trying right now to think if I can even spell things backwards, let alone repeat words back. Yes. Kelly has that talent, by the way.
Fed Chair Jerome Powell just wrapping up his comments at the New York Times DealBook Summit. Now, as the Fed Chair was speaking, the Fed itself also released the latest Beige Book, so a lot of headlines to kind of run you through. Let's get up to Steve Liesman, bring us those details and some initial reaction to Powell's comments. Hi, Steve.
Yeah, hi. I'm just going to cut to the chase of what I think interests our viewers here, and that is his commentary on policy, and that he says we were the last major central bank to cut, and we're now on a path to bring rates back towards neutral, but because the economy is doing well, I'll just read this. The economy is strong, and it's stronger than we thought it was going to be in September. The labor market is better, and the downside risks appear to be less, and inflation is coming a little higher. The good news is we can afford to be a little more cautious as we try to find neutral. So I don't know what that little more cautious means. I was watching the Fed probabilities, and I'll just double check it one more time, where we're at a 75% probability of a cut in December. That remains the case. It looked like the March and the May data were May probabilities are pretty much the same. So not a big change. You know, we talked about this, Kelly, in the last hour, which is that there's still a bunch of data to come. The Fed is in doesn't feel any particular urgency to cut. We'll see if the data itself that we get on Friday and again another employment report change the market's outlook, and the Fed says, all right, if that's where the market's priced, that's what we'll give the market here, or if it feels some sort of need to disappoint the market here. I did not hear the word recalibration, which I was listening for. I don't know. He wasn't asked about it, so I don't know if we're still in a recalibration mode, which would make me think, you know what, the Fed is a little less concerned about the data itself. So we'll just have to wait and see and hear more Fed commentary, as well as watch the data and try to plug that into this idea that they can afford to be a little more cautious now.
What did you say, Steve, were the odds of a December cut now?
75, exactly where they were. And then if you would call up, by the way, the December 2025 contract, which I can call up on my thing. I saw it. It was up a little bit. I didn't see a whole lot of movement there. If you look at the FFZ5 or G25, which is the December contract, and what you see is that it was up. It was actually came down a little bit more, either from Barkin or from the data that came out today, probably the ISM disappointing, some other weaker sort of data, as well as perhaps the ADP number set the market thinking that maybe the Friday jobs report will not be as robust as is dialed in. I think they're at 214,000. ADP came in at 146,000. So what does that tell you? It tells you that we don't know, but because ADP did not appear to pick up the hurricanes and the strike, there is that, that's the 30-day, the December 25. There you go, 96. Guys, we have another way of looking at that, which is the actual rate. Minus that from 100, and you'll get the actual rate. It didn't really move very much is the main point, is that the market is in a kind of wait-and-see mode here, where the data is going to tell us where the Fed's going to go in December.
Hey, Steve, it's Dom. The other thing we want to bring up besides DealBook is Beige Book. And the takeaway, I guess, here is that they say that the economic activity, quote unquote, rose slightly in most areas in the economy in the U.S. Is there anything else we need to focus on with regard to that Beige Book report?
Well, I was interested in this comment here. Employment levels were flat or up only slightly across districts. I think that was an interesting commentary. You had a kind of, you still had a positive above 50 employment number in the ISM services, but it was down a bit in terms of its level. Also said prices rose only at a modest pace across Federal Reserve districts. And there was one other comment, Don, that I thought was interesting, if I could just call it up to make sure I get it right, where they said, and put my glasses back on, contacts indicate they expect the current pace of price growth to persist, but businesses in several districts indicated tariffs pose a significant upside risk to inflation. And guys, if I could just take a step back, I've been here at the CFO Council the last night and today, and I had a chance to talk to the guys who run the books for some pretty big companies. And I will tell you, there is, I want to say, almost equal mixtures of optimism and uncertainty out there. And we were talking last night, and guys were like, hey, if the Trump administration, and women, by the way, there were a bunch of women who did the same job, saying, hey, if we get, for example, 100% expensing on our investments, that's a huge plus. If we're allowed to do more in terms of rolling back the interest deductions on interest payments that we had in the prior Trump administration, that's great. But over here, we have the tariffs. We don't quite know what's going to happen with them. So there's just a lot of uncertainty. I guess cautious optimism sounded like it, because some people say, you know what? Hey, those tariffs are coming through, but they won't be, they're a negotiation tactic, or they won't affect me. So a lot of uncertainty out there, but also a good chunk of optimism.
All right. Sounds like a wall of worry scenario, Steve, proverbially. Thank you very much, Steve. We'll see you later on.